If I told you that there was a developed stock market out there that had beaten the US in the last few years, which one would you guess? Because most people would probably just automatically default to the US stock market, right? Really, they'd be wrong. It's actually Japan, the country that everyone said was uninvestable and languished for over 30 years, has in recent times yet again hit all-time highs, had an absolutely roaring year, and is showing quite good promise for the future as well. So what's changed? And crucially, is it a good time for you to be looking at this as an investment choice? Hi and welcome back. My name's Zoe and this is my channel, Words on Wealth. As a former wealth manager, I break down key investing topics and headlines to make you a more confident investor. I'm just going to wind back the clock all the way to the 80s when Japan was booming. It made up over of the global stock market by market cap. And alongside other major nations, of course, like the US, it was seen as a superbly popular choice amongst investors. They were really part of the forward-thinking tech surge that we then later saw hit the US with the dot-com bubble. A huge inflation in their real estate caused a bit of a bubble to form over the 80s. And then in 1989, they saw an enormous drop in their stock market that took nearly 30 years to recover from. Fair enough, in this period, investors kind of forgot about Japan. It wasn't booming. In fact, it was firmly languishing. After such a big shock to the overall markets, many Japanese investors took their investments out of the Nikkei and local investments and held on to whatever they could in cash. This has meant nearly 30 years of underinvestment from both domestic investors as well as underinvestment from foreign investors who don't see it as that attractive. So what's changed? Why is Japan suddenly booming and why is it becoming suddenly attractive to investors? The first point is about inflation. Now, the vast majority of governments target some level of inflation. It might sound counterproductive, but it's normally around the 2% mark, which is seen to be more or less sustainable and something that can be managed. Of course, as we know, as we've seen over the last few years, high levels of inflation is not desirable. It can cause havoc within the economy. But actually, you do need a little bit. And ironically, it was inflation that Japan needed to be able to get going. In 2020, of course, the world went into a global pandemic, and Japan was no exception. This led to really low levels of spending in most economies, and as a result, most saw relatively low levels of inflation. Japan was exactly the same. But then, as we moved into 2022 and the globe saw oil prices spike off the back of conflict in Ukraine, Japan actually saw some tailwinds and inflation started to creep up, hitting around the 3% mark. I did warn you, don't get too excited. Whilst the rest of the world was struggling with inflation at 9, 10, even higher percentages, Japan were confronting the idea for the first time in a long time of around 3% inflation. For many years. Now, for nearly the last 30 years, Japan has had a negative interest rate policy. Not least of which because they want to move people from holding their cash into stimulating the markets. But with a little bit of inflation back, what started to happen was that there was then a bit of wage growth back. And companies could start rising prices again. And fast forward again about 4 years, and they've seen that inflation settle again in around the 1% mark, which has led the Japanese central bank to be able to raise interest rates above that negative point for the first time in a really long time. So think of it as reflation. It's the first reason why Japan is suddenly doing so well, and the ball has got rolling out of that 30-year slump. The second reason why Japan has been doing well is due to corporate reforms. Tokyo Stock Exchange kicked into action in around 2023 with various different reforms to try and encourage companies that had been holding back. This included increasing things like transparency for shareholders, but also pushing companies to distribute more dividends to shareholders and spending more of the cash that they were sitting on. With a very pro-business government in place as well, this has really helped boost things like those companies spending money and really invigorating investors to get involved. There has also been new investing products introduced in Japan, which has further helped investment into domestic companies. It certainly seems to be that in the last few years, Japanese companies have moved away from their previous attitudes of focusing on long-term stability and relationships and actually prioritizing the needs of efficiency, profitability, and keeping those shareholders happy. Now, the third reason is all about AI. And when people think of AI, I think what they automatically jump to is Nvidia and many of the other major Silicon Valley players in the US. Nvidia can't build AI on its own. Someone has to manufacture the chips that go inside of it. Someone has to build the factories. Someone has to supply the precision components. And that is where Japan has really come into play. They've also been front runners in robotics for decades. That actually was something that really helped them in that early boom back in the 80s. And those robotics are now helping with things like automations within factories that are feeding into that AI boom and supply chain. Companies like NTT and Kioxia have really helped with some of the memory and data centers that are needed for AI, as well as some of the digital infrastructure. And then we can't overlook the big names such as Mitsubishi. Mitsubishi is not just an AI company. That would be wrong to say. But it has adapted over the years. Now it focuses on a whole range of sectors. Energy to industrial equipment, to infrastructure, to technology, to raw materials. So Japan isn't just riding the wave off the back of building the chatbots, but they're actually really underpinning a lot of the infrastructure that is behind the... And we have the Warren Buffett factor. For anybody that's unaware, Warren Buffett is, of course, one of the greatest investors of all times, and he is the owner of a company named Berkshire Hathaway. And normally when Warren Buffett does something, a lot of the world start to listen. So when Warren Buffett started buying Japanese companies, then people started paying attention. Berkshire Hathaway has investments in around 5 major Japanese companies that total in the value of around $41 billion. He originally opened these positions all the way back in 2019, but has since contributed and added more to them over the last few years. Warren Buffett took these investments on. It's not necessarily because they are the most exciting, but what he saw was an opportunity. He saw that they were cheap. He saw that they were cash generative, and also he saw and continued to see that they were becoming ever more shareholder friendly. So it's sounding like the stock market's changed their rules, the government's changed their rules, and Warren Buffett's jumped on the bandwagon. What is the catch here? The first one that cannot be overlooked is that Japan has an aging population. In fact, it has the world's oldest population. Around 30% of its roughly 124 million population are in the 65 and over category. Around 1 in 10 are over the age of 80. They have some good genes over there. But what this means from an economic perspective is that there are less people in the workforce, and it forms a kind of pyramid style shape where it becomes very top heavy within the economy. You've got more expensive, generally, elderly people who aren't working and are more dependent on the care and health system. And you've got less people who are younger that are earning, generating and paying into the tax system and trying to support that then top-heavy ageing population section. There are, of course, many ways to manage this, and many countries across the globe are facing this issue as well. It's not unique to Japan. It's just that Japan particularly is facing a huge percentage of that ageing population. In time, this could lead to another drag on the economy, GDP, and therefore have a knock-on impact into the markets as well. The second big problem that they have is that Japan has huge levels of government debt. In fact, they have the highest levels of government debt in the world. Increasing levels of debt is becoming a thing across the globe, and it's becoming moderately worrying in certain places. The reason why economists still aren't too worried about the levels of debt in Japan is because of where the debt is held. And most of it is still held domestically. So it's the likes of Japanese banks, Japanese pension companies, insurance companies who are holding an awful lot of this debt in comparison to other nations where a lot of the debt is held internationally. And then the third risk is all about the Japanese yen. And this, for any currency nerds out there, is a really interesting case. The Japanese yen is superbly weak at the moment. There's a few reasons that feed into this. First is relating to those interest rates. Usually, when interest rates are high, there is a certain appeal and attractiveness for foreign investors to put their money there. As Japan has had historically low interest rates, the yen and putting money into Japan became ever less attractive because there was always other places where returns could be better and higher. And as a result, the yen steadily weakened. We also saw over COVID that Japan took a slightly different approach to their inflation controls because actually their inflation wasn't as high as everywhere else, and they focused more on monetary policy rather than just what we did here in the UK, across Europe and in the US, which was raise those interest rates. Because they didn't do the same, the yen remained still relatively unattractive. And then there was something called carry trading. This is where people were basically using the yen to be able to borrow money over the short term. because it was weak and easy to do. This caused occasional spikes in the yen, which made it more volatile and, you guessed it, yet again, less attractive. There's always winners and losers though over a weak currency, because at the moment exporters are loving a weak yen. It means that it's super attractive to buy products from Japan because it's relatively cheap. But this is set to change over the next few years. It's likely that interest rates will rise a little bit, and with that they expect the yen to strengthen a little bit too. And what that could mean is that there is a bit of a knock-on impact, because if the yen gets more expensive, then that could mean that it hurts certain industries within Japan. Could have a bit of a slowing on the economy, but it's expected to be relatively minor as an overall view, but can't be overlooked. And then the last risk, of course, is one that impacts everywhere, and that's the ongoing geopolitical tensions. We are an internationally connected globe, and our markets are also intrinsically connected, as we've seen with the likes of Trump's tariffs, as well as the most recent conflict and the closure of the Strait of Hormuz. There are individual impacts felt across the globe by different economies and different stock markets as well. And Japan is by no means immune from any of these changes. If, for example, we see a bit of an AI bubble pop in the US, then we'll likely see ramifications into Japan. Because ultimately a lot of their stock market at the moment and the success that it's seeing is being built off the infrastructure behind AI. Equally, if we see again another oil price spike, Japan will be impacted. However, many argue that their diversification as a stock market, unlike when we compare to, for example, Korea, which has also recently seen a massive boom, but mostly off the back of 2 companies. And by the way, if anyone's interested, drop me a comment and I'll make another video about that. So can all this success continue, and will it keep going in the same direction? Of course, if I had a crystal ball, then I would be a very wealthy woman. Unfortunately, none of us can predict the future, but we can look at where the signs are at least pointing and try and make a judgment call. And for me, Japan is certainly going in the right direction. There is promising signs that have come out of the last few years, and certainly they've shown they can do it before. So why not again? Their valuations are still below what the US is. They've got that broad market spread, and their earnings are improving. I struggle to see a reason why, even if you feel that it's already too late, this couldn't continue still into the future. So how can you get involved in investing in Japan if you're sat not in Japan and thinking, this sounds all right to me? Well, as you know, if you followed a few videos of mine, I talk a lot about using ETFs and index funds to invest. I'll drop a link to an explainer if anybody is unaware. But essentially, these give a broad market spread and a lot of diversification. They're an easy way to invest, and they're usually super low cost. When it comes to investing in Japan, there are a few main ways that you can get involved. You can invest in that Nikkei 225, or you can invest and turn more to a broader market view, either via their bigger topics market or via a different index, such as a Japan index that is available in your country and on the investing platform that you're using. When you're looking at these different funds, it's worth pointing out that you might see some say hedged and some say unhedged. This refers specifically within these examples to the use of currency, and some will just even out some of the fluctuations within that Japanese yen that I spoke about, whilst others won't. So if you're somebody that's looking for something that's a little bit different in your portfolio, if you've got a relatively open mind and high tolerance to risk, then Japan may well be something that you want to throw into the mix. It's not replacing the US, don't get me wrong, but when there is a market that has been overlooked and forgotten, then it certainly piques my interest. And it feels that for years, investors have ignored Japan because of its past. The question is now, are they going to continue to underestimate its future, or are they going to jump on board?